Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ahmed Ismail. He's the founder of Fluid to discuss crypto's banking future in the US. Ahmed, it's great to have you with us. Welcome to Trade Talks.
Thank you so much, Jill, for having me on.
You got it. What did the failures of Signature, SVB, and Silvergate mean for the crypto sector?
Well, it's pretty clear what happened. The crypto sector is starting to act as a safe haven amid the bank runs on SVB and Signature, which were a direct result of total Fed policy failure in risk management and asset liability duration mismatch.
What does the future look like when it comes to crypto banking?
Well, crypto now is, as I said, is acting like a safe haven. We saw that Bitcoin today rose to, it hit $27,000 from $16,000 about a month ago. And I see that the US banking system, these banking failures are just the start of a wider contagion effect that we're seeing in the regional banking sector in the US. What's that going to matter? Well, crypto still needs these banks as fiat to crypto on-ramps. What these failures will do is that push these big crypto firms to bank elsewhere outside of the US. So you see jurisdictions like Switzerland. So SEBA Bank, for instance, is Liechtenstein is a direct beneficiary, and the UAE, which has been a big proponent of crypto, is set to gain massively from the fallout of the banking sector in relation to banking crypto customers.
So are you suggesting that what needs to happen from a regulatory perspective that you think will make the banking sector more safe?
Well, I don't think there is a quick fix to this. I think the issue has been that the Fed has failed massively in its policies and actually regulating these banks. Kathy Wood.
How so?
Well, it's very clear. Assets, so deposits were earning 3 to 5%. Securities were earning 1 to 2%. And these banks, such as Signature, Silvergate, SVB, which had clearly had issues in governance, ended up losing out and having massive asset liability mismatches. And the issue there,
that's corporate governance that failed
exactly.
there. Right. So I mean, that's a Fed failure or corporate governance failure.
Well, corporate governance and the FDIC, which failed. The equity balances of these banks has completely depleted as a result. And the regulators in the US and the US government generally has ended up blaming the crypto sector when the crypto sector is transparent. Blockchain is transparent. It's there. It's immutable. It's there for everyone to see. So it is. I feel underhand war on the crypto sector for sure. But all that's doing is that pushing big cryptocurrency firms to bank away from the US and bank elsewhere, and the other regions in the world will thrive. And you're seeing the demise of the US banking sector.
So where does Fluid fit in the crypto ecosystem, and what solutions does it provide?
So Fluid is a liquidity aggregator. One of the big problems in the crypto industry is that liquidity is highly fragmented. So what we do is we use AI to try to aggregate that liquidity into one place, so centralized and decentralized liquidity. So when shocks happen in the crypto sector, there is liquidity. So for instance, if you're holding a position, if you're a trader, you hold a position and you're able to trade out of that position, you need best execution, and we use AI to get that. And we aggregate both centralized and decentralized liquidity. Crypto, as you know, is very vulnerable, and it's a very nascent sector. It's very vulnerable to flash crashes, market manipulation, because liquidity is trading pretty thinly.
So why can't TradFi leverage this type of AI solution for risk management? It seems as if traditional finance, the banks in particular, are kind of using outdated risk management tools when, I mean, AI can predict and think of scenarios that a person on a spreadsheet necessarily can't. It almost seems like this would make sense for that as well.
That's correct. I mean, AI is moving at lightning speed. We've seen, things like ChatGPT replace humans in content. We've heard of generative AI. In the banking sector, AI can be used in a whole host of risk management tools. We're just touching the surface with what we do at Fluid, but really, AI should be used for everything from, KYC prediction. The problem is that the banking sector is, outdated, clunky, and this is where crypto comes in, and AI can come in and solve a lot of these problems and take out a lot of expensive real estate and a lot of overpaid bankers.
Yeah, well, I mean, it makes sense to me. Anything that includes leverage and liquidity. I mean, this happens, every few years with every crisis. It always comes down to over leverage and liquidity and just mismanagement of the risk. So I would agree with you there that, AI can foresee some of these things or use predictive tools that a person might necessarily not be able to. Ahmed, appreciate that insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.